Okay. Um, so, yeah, like I said, RWA is the hottest thing going around. We're so excited to see finally institutional adoption. What would you say, and this is a question for everyone here, what would you say are the main challenges you're facing in bringing institutional adoption?
Yeah.
You can start.
Yes. Okay.
You guys are the experts at this now.
Yeah, before, quick step back. So I am Emilio, VP engineering at Aave. We work for Aave Labs on everything related to Aave, the Aave ecosystem, as contributors of the Aave DAO, including working on RWA innovation around RWA assets. So in regard to RWAs, I would say that the most challenging aspect at the moment is not technical, but it's rather compliance and regulation, which hopefully things will change in the next months and years. To be honest, it doesn't. What we have noticed, and the other participants, I guess, can confirm, is that despite the complexities of around regulation and compliance, the space is growing very, very quickly. There are more and more actors that want to enter and they want to bring assets on chain. And this is very interesting because 2 years ago, if we were going to institutionals and talk about Aave and bringing real world assets on chain, they would look at you like the devil, stay away from me, something like that. And today it's actually everyone, it's actually the opposite. So they are looking for people that help bring their asset on chain through facilitating the technology around it. And that's pretty cool to see. And I think the space is gonna move very, very quickly.
Yeah, I agree. I think we went from 0 to 1 already with RWA. So I think the first step is already always the hardest, right? We've already taken the first step with Beedle, with many stable coins coming up every day. So I think there are 2 stages of adoption for RWAs. The first one is the assets start getting issued on chain. That already is happening, right? We're seeing an explosion of assets getting issued on chain, and new tokenization use cases are coming up on a weekly basis. I think the second stage is where it gets interesting. It's how do we take these RWAs and get them into DeFi, into Aave, to be used as collateral, to be used to loan, etc. I think the second stage is where compliance, identity, regulation starts becoming the main challenge to solve. But the good aspect is that they want to solve it. It's not super hard to solve. That's something we've been working on Chainlink for a while. It's basically how do we use oracles to get identity data on chain, compliance data on chain, etc. I think the main challenge which we had before was that no one wanted to touch crypto 3-4 years ago, right? And right now, if you look at where we are today as a space, we're mainstream today. Look at the US election. Everyone heard of Poly Market, right? Look at stable coins getting used all over the world. So we've gone through the main blockers we had before, which was a really big blocker. It's no one wanted to really issue assets on chain. Now they want to do it, and there is this legal blocker, which is how do we get these assets being issued onto Aave, etc. And frankly, I think this blocker is going to get solved very, very quickly in the next few months. That's my view.
Yeah, I think I'm going to take a little bit of a spicy take here because I actually think that the 0 to 1 problem is easier than the 10 to 100 problem. Because if you're going from 0 to 1, you can have highly motivated individuals, very smart people that have a particular problem that they're trying to solve, and they're very motivated to solve it. For the mass opportunity, which is where PayPal operates, we need to go and figure out how to solve problems that either people don't necessarily know that they have right now, so what we did with digital commerce before digital commerce was really a thing, or we have to show them that it is better, demonstrably better than something that they've become habituated to over the last 10, 20 years. And so I actually think that, yes, absolutely compliance and regulatory are an issue. Those will sort themselves out. But one of the key blockers, I think, is just around awareness and education to make sure that people really understand why this is better and then how they can get involved.
So my background is I started Centrifuge, and I've been working on RWAs for the last 7 years, basically. So I can say, like, we went live with our product in 2020, and like RWAs at the time, there was like Centrifuge, and maybe there's like Realty as like maybe one other project that today you would count. Combined TVL was $20 million. Today, if we don't count stablecoins, we're like way past $1 billion, like 4 years later. I think the 0 to 1 was actually, I think there are two big changes that had to happen. First, we had to get big enough in DeFi that you can actually do this stuff at scale that makes sense for finance, because $20 million does not excite anyone on Wall Street. Like, you need hundreds of millions. And like we kind of got there in 21, and then FTX and Luna screwed it up for everyone because it just suddenly became toxic. Now enough time has passed that like it's not toxic anymore. And so this is why we're in this now where we are, right? And then also the other big thing is like zero interest rate policy was not helping either, because like there's just not a lot of interesting stuff in TradFi. The other problem though also was like DeFi was started by mostly engineers that understood crypto. A lot of them didn't understand finance, myself included. And so I think this other big, and I've like debated if real world assets can even work in crypto like many, many years. It's today not a conversation to have anymore, mostly. There's still purity DAI and like other like purely ETH collateralized stablecoin ideas and stuff like that, right? But most of DeFi now, it's like, yeah, like we're building a financial system for all assets, not we're building a financial system for ETH and crypto utility tokens, governance tokens, whatever. So I think those are the two big 0 to 1 unlocks that I think we've kind of gotten to. Today, the big challenge is like we have a lot of momentum of how do we bring real world assets into DeFi and sell it to users that are on chain already. But that is like a tiny, tiny, tiny part of the market, right? Like billion TVL is nothing compared to trillions of dollars that large asset managers have in AUM in their traditional products. So the point we need to get to, and this is where what you're saying is right, like there's a lot of like there's hundreds of thousands of people that we need to convince that this technology is actually better, so that they get comfortable to the point where they're not just, where like BlackRock and Janice Henderson, who we work with, and like all Franklin Templeton, right, where they're not just saying, oh, we are selling a product to degenerates on chain. We're also actually comfortable with taking that product and suggesting it to one of our users over buying a traditional paper product, right? And so that is like going to be what unlocks like this industry going like 100,000x whatever, right? And I think that is like the place we're at it now.
I'm a little bit hurt over the disparaging comments over degenerates on chain.
No,
this is a face
no,
of
they're the heroes.
like
without them, we wouldn't be anywhere.
Right.
No, of course, I'm a degenerate as well.
Everybody in
Who's
this
a
room
degenerate
is a
here?
Everyone here. No, I mean,
Yeah.
obviously it's called DeFi.
Yeah, so piece of respect.
Respect to the degens, of course.
Edwin, we're so excited to have you here for the first time in a panel from our little circle as well. We were all really excited to see PayPal jumping into crypto. It's one of those moments where the degenerates on chain say, "Wow." Well, the institutions, the big brands are coming. Can you tell us a little bit more about the PayPal's crypto strategy and how you decided to jump in, and what's the internal strategy as well? Because I understand that PYUSD is a separate division.
It's a business unit,
Yeah.
but it's directly part of PayPal. I think it's funny because, when you have a bunch of degenerates on chain and somebody like PayPal shows up, there's sort of two different reactions that you can go to, right? It's like, hey, this is great because now all of a sudden we have the opportunity to take what we've been building and nurturing and blow it out to the masses. Or holy crap, like what is going to happen now, and like our safe, protected area is suddenly being invaded. I'm really pleased that most folks seem to be taking the welcoming step, and we're really proud to be part of that. Our view is actually pretty simple. We're in stablecoins in particular and crypto in general because we think it's a better way to move value around the world. And that's what PayPal does, is that we are in the business of connecting people and being able to move financial assets and financial value across the world. And if you think about it, when you use PayPal or Venmo or Grab or something like that, you send money to somebody else, your balance ticks up and sort of you're done. But underneath the covers, that money is actually moving 3, 5, 7, 10 days later. And that's insane when you think about it in a world where we're talking about tokenizing assets, we're talking about moving value around instantaneously, and the financial system is just not keeping up. And so we're in this space because the whole idea of tokenizing real-world assets or tokenizing just money is this idea that now all of a sudden in the digital domain, you can move that around. It is as fast, as cheap, as programmable as any other thing that you can move across the network. And that's a huge game changer for us, and I think it's a huge game changer for our customers.
Thank you. Johann, oracles are obviously essential infrastructure, as you mentioned before, for the on-chain DeFi ecosystem, but more so for RWAs. How does Chainlink provide a solution tailored towards RWAs? And what are the difference between oracles for regular crypto and RWAs, if any?
So for DeFi and crypto in general, there were two stable foundations we provided the space. The first one is data feeds. What we basically saw 5 years ago now, when we started working with DeFi, was if we provide a stable foundation for DeFi protocols to get price data on chain, then they can focus on innovating with their DApp and build cool stuff like Aave, right? So that was one. For a crypto token to get utility, it needs price data to get into DeFi. The second thing which popped up was cross-chain, right? So a long time ago, we had only Ethereum, and everyone was building on Ethereum. Today, we have like 1,000 chains. Every week, there is a new L2, a new L1, etc. You need your token to flow across these chains. That's the two things you need for any DeFi asset to be useful, right? Data, cross-chain. For RWAs, you need a few more layers because you add compliance on top. You need identity. You need to know who's going to own the token. Are they KYC, AML, etc. You need compliance oracles to basically check for each jurisdiction, not only one jurisdiction, right? For every jurisdiction that's going to own this asset, is the owner compliant with the jurisdiction in which they apply, right? If someone is owning the asset and they're in Italy, it's not going to be the same as someone who's owning the asset and they're in the US. So you need compliance oracles. You need identity oracles. You need privacy. Banks are not going to transact on-chain if all their transactions are public. We actually released something with ANZ, which is one of the biggest banks in Australia, a few weeks ago, around how you can do cross-chain privacy-enabled transactions using oracles, right? So the way to think of it is Chainlink has been solving a lot of technical issues crypto tokens have in order to actually become useful, such as data, such as cross-chain, etc. You add a new layer of complexity when you go into RWAs, which is identity, compliance, privacy. Those are all things we're focusing on now to allow people to build RWAs in an easy manner. Yeah.
You brought up an excellent point, so I'm going to go off script here very, very quickly. How do institutions feel about privacy, about ZK proofs? Is there, are they, obviously, RWAs are very, very attractive because they're 24/7, they're instant, and all the benefits that carries. We can look at, a proper financial industry that's completely on chain. But with our technologies come also very, very exciting technologies as ZK proofs and complete privacy. Are you also having those conversations? Yeah. This is a question for everyone. Feel free to answer.
I mean, I'll go very quickly. I think it's a key requirement for many of them, and I also think if you want to do identity on-chain, you will need privacy, right? Because otherwise, everyone's public identity is on-chain, it doesn't work. So I think it's a key thing we need to get right for RWAs to actually onboard into the space.
And how do regulators feel like?
Yeah, I think we work and talked with a number of regulators and central banks and things, and they're cautiously excited about it, I would say. I think that folks understand that there are real potential technology solutions. On the other hand, I think they split up into sort of two concerns. One is that they worry that the technology is not enough. So, we talk to central banks who say, we don't want to see transactions on chain. We don't want to be accused of having the ability to censor transactions. But the public isn't going to simply trust that the technology is good enough to do that. There is some belief that at some point ZK proofs will be broken, that cryptography will not be strong enough, and suddenly these technical-only controls will not be enough. So that's one side. The other side are the folks that say, yes, but we also need to see the transactions for compliance and various other sorts of things. And I think that we see a real tension that's happening inside of even these agencies from folks that say, yeah, it's too much, and some others that say it's not enough. I don't know if you're seeing the same thing.
I mean, so when we started working on this, like privacy was actually one of the, like I spent a lot of time researching zero knowledge stuff like 6 years ago. I realized at the end, like the technology at the time wasn't mature enough, and like ultimately like DeFi turned into what it is today without any privacy. I think the only reason why is because there's a large enough number of users that don't care. For any business, it would be pretty hard, and I think even if you can disconnect the name of the account from the address, in theory, like in practice, it's going to be so easy to slip up once and like permanently link your address. And like also, right, most people that use like crypto today use it for a small part of their operations. Like if like my monthly rent payment was linked to my farming positions, I think that would be a much bigger problem, right? And so that I think is just the fact that like today it's not the only financial system, but I fundamentally believe like it's a problem we need to fix. I think we're still a couple of years out though from seeing viable privacy solutions, and it's not been a focus for me and for Centrifuge because of that. But yes, institutions will want it, for sure.
Yeah, from a DeFi perspective, like the interesting thing that I personally noticed is that we never had over the 5+ years in which Aave has been released and available on chain, like users have been requesting a variety of features, but nothing specific about privacy, which I find like related to what he was saying pretty interesting. Is probably most of the users, they don't really care, maybe. But at the same time, I see like clear possibilities there, thinking, I don't know, ZK KYC. So we have clear ways today of proving data without actually sharing the data. So we could prevent like thousands and thousands of data leaks and like that we have been seeing in the past. They can even endanger people's lives, like if data gets leaked, like we have seen like the Ledger data leak like last year. I think that for some people was truly problematic. Some people had to move like from their house because of that. So I do definitely see that, and I hope to see like more adoption for these technologies in the future to actually solve some of these problems that don't really need to exist anymore in 2024. Yeah.
But I mean, wouldn't you say that if your bank suddenly increased your interest rate because they saw that you took on a bunch of leverage on chain, for your like if your mortgage got adjusted, that most people in DeFi would probably care about privacy pretty quickly.
Maybe we are not at the point yet where people actually need to care, but exactly, maybe we'll get at that point. Yeah.
I mean, we hear a lot from folks, that are trying to use stable coins to do payroll, and what they hear is, we have a real problem with that because now you do that, and now our entire salaries for all of our employees are available on chain, right? And so, when you talk about payments, like these kinds of things start to matter. You don't necessarily want to know exactly who's paying what for how much for what, and so these are things that we think about a lot. But
this is really interesting. Emilio, can you tell us a little bit more about Aave's RWA strategy, upcoming strategy in view of Aave 2030?
there have been a variety of proposals already, not interestingly enough, not only coming from Aave Labs, but from other governance contributors as well. I think of ACI, I think of Token Logic, that have been working on this aspect in parallel as well, which I think is pretty cool. From the Aave Labs side of things, like there has been a lot of back and forth with BlackRock, for example, on the Beetle side of things. So we have proposed, and we are currently evaluating solutions for implementing a stability module for Go to use Beetle under the hood. So like rather than having stable coins that are not generating any yield, like the stable coins that are locked in the Go stability module get automatically reinvest into Beetle, which is really cool because also Beetle allows like redemption on the fly through Circle that allows like the direct redemption. So that's something that is more concretely in the works, but like we are also evaluating with Chainlink as well. We work very closely. A variety of solutions to allow more generally this asset class to be used within the Aave ecosystem as collateral to allow people to actually unlock the liquidity through these assets in DeFi, which comes with certain challenges like because of regulations, not everyone can touch these on-chain securities. So there are some restrictions on who can and cannot access these securities, who can and cannot liquidate these securities. So these are the challenges that we are trying to overcome, and I think we are getting there very quickly.
Thank you. And yeah, my final question to Lucas. First of all, congratulations for being right about our RWAs throughout all of this time.
It took long enough.
But you finally made it. Jokes aside, you've seen it all, like you mentioned. What are the most successful cases of institutional adoption, and what do you think is also the tipping point towards unleashing a proper asset class?
So I think, ultimately a big challenge in the past was like with zero interest rates, there were no interesting products, and the thing that made made everyone reconsider real-world assets, right, was the fact that you could earn 5% off-chain and 2% on-chain by with like on Aave, right? I think that was like roughly the numbers like a year ago, and before that, it was all like very exotic, very complicated products, like what Centrifuge did in private credit, like Hamilton Lane, and like I think Golden Tree, right? They did like these, and even Apollo. I think they looked at private credit products, which for the DeFi retail audience were just too hard. But it was the only thing where you could get some yield. We're now at a place where actually like treasury bills are a very simple product. And so for the first time, it's actually possible to build something that is easy to understand, easy enough to build, and like anyone kind of needs. And I think that was like got us to the place where we are today, and actually got us to the billion. What's interesting now is actually I talked to a lot of people about what's next. I think of course over the next 5 years, maybe 10, maybe 20 years, we'll see like every asset class, I think, to start getting tokenized. Like until all of finance is on chain will take a while, but like there's enough people like thinking about like the next steps, and like the products that I think are going to come next is like bond products, CLOs. So like still very simple ETF like products that just have like a very diversified portfolio of maybe slightly riskier than treasury bills, but like still giving you 1% a year of extra return, right? And I think that's so. There's like I own some of these in my brokerage account in off-chain, right? And then like, it would be great to start like actually just parking stable, relatively safe cash in like something that's liquid. And I think that's, so like for me, it's just looking at the ETF space and saying, okay, like what are the products that like DeFi people will like next? And it's always going to be high liquidity because everyone wants to be able to ape back into ETH or the next NFT or whatever else. Relatively safe, but still giving you like higher yield than what you can get today. And so I think that's like the opportunity we see and what we're working on.
What about like other asset classes like stocks, senior bonds?
I think stocks are like stocks for me are interesting because it's like then you really need a very strong DeFi composability. Sorry, my mic is off. Huh? You need very strong DeFi composability because if you want to hold stocks on chains, you want to do it because you want to like short Tesla, long ETH, right? Or something like that. And I think like with treasury bills and like a CLO product where you just like park some cash in it in a DAO treasury or like in a lending market, or like well, lending market's a different example, but like in a DAO treasury, right? Like owning BlackRock BUIDL in it is very easy. I think stocks, like the use case, is much more going to be speculative trading, like leveraging, and so I think that requires like just a bit more infrastructure to be built, but it'll come.
Is that true only if you are in a space where you have access to deep markets for equities? I mean, like part of the problem with stocks is that if you're not in the US, if you're not in Europe, you're not, you can't get to it, right? And one of the advantages, I think, of RWAs, particularly with stocks, is that it does open up the possibility that now you can be in Latin America or you can be in Africa and various other sorts of things.
I would say, unfortunately, the reality, right, is it's still relatively hard to build real-world asset products that have broad retail distribution. Like, I think Bakkt is one of the few that actually do it, and like when you look at like the vast majority of TVL today in real-world assets, it's all like very heavily regulated BVI issuance where like the minimum investment is 100,000. It takes like a couple of days to go through KYC. I think crypto-friendly SEC that will actually approve a Reg S fund, right? A typical like offering like you would, or like you would do what we buy on a stock exchange. Then I think we're going to actually see a huge market opening up. I agree with you, but for now I think it's been too hard to find like a good legal jurisdiction where you can aggressively go after these markets. But yeah, I would love to like allow people to buy $5 worth of Tesla stock using crypto with like super simple on off ramp around the world, and I think we're going to get there. It's just not yet, and that's regulatory issues.
Great. Thank you so much. I have a great idea, by the way. When subprime mortgages?
I'm sure someone will try it eventually.
All right. Thank you so much, guys.
Thank you.
Thank you.